Traditional markets are up a little bit today as Bitcoin continues to range. So let's jump in and take a look at what's going on here. And also we're going to take a look at the Bitcoin logarithmic growth curves in a second, but markets are up about 0.5% across the board, 1.5% on the NASDAQ, almost 1% on the S&P, and 0.44% on the Dow Jones. And nothing major in financial news today. Bond yields are slipping a little bit as investors are more concerned about potential recession. The bond yields are slipping, meaning, there's more people flooding into bonds for that safety. The NASDAQ composite added 1% as bond yields slipped, and Wall Street continued to weigh recession risks. The tech-heavy NASDAQ outpaced other averages as market participants continued to mull over the likelihood of economic downturn. So what is priced into the markets right now? One of the questions is, if recession is imminent and, all of this that we're going through now, is somewhat predictable, then what exactly is priced in? Is a recession priced in the market yet? Well, it's not, because we aren't officially in a recession yet, according to the data that we've received. A lot of economists are saying that we're not in a recession. The politicians obviously are saying, and the Fed, that we're not in a recession right now, although we've already had 1 quarter of negative GDP. So we'll just have to wait to see what the next quarter GDP says. And of course, we have inflation, CPI coming out again next month. And, if that's hot, the Fed's going to continue to raise rates as they said, which will bring another leg down. So the markets can't really price in recession without the Fed, without economists, pretty much, and analysts, everybody across the board agreeing that that the country's in recession, or the global economy is in recession. Economies around the world, and there are investment analysts like JP Morgan came out and said that they see inflation easing by middle of the year, which is kind of like right now saying that the S&P is going to rebound to 4,800. Just crazy predictions out there. I don't know where they get these people or these analysis. And the only thing I could think of when the full article comes out, we'll look at it, is obviously they are facing a lot of redemptions. They need people to invest money. So they're trying to talk people into putting their money in the market. So when you hear a lot of investment analysts on Wall Street and things like that, fund managers, you have to understand that they're talking their book. They make their money on either assets under management or trading fees, volume, things like that. So they need people to continue to trade, continue to put money in the market so they can make money. So you got to kind of qualify that information. So Bitcoin's continuing to range. This price action is on the hourly. Right here looks a lot like what we saw last month and during this consolidation. And this little trading range was around 12% overall, from top to bottom, with a couple of these nice bounces. And right now, once the price settled into this range, it's dancing around a 9.75, almost a 10% range. Might get a little bounce again back up to the 22 as it kind of ranges along, waiting for the next CPI print. And to see that the Fed follows through on that rate hike, and then we'll look for that next leg down, and then price could potentially consolidate somewhere in that range down. So if it takes another kind of ranges in here and then takes another step down in this area, in that probably 15, 16, 17,000 to $18,000 range, it could range down in that area next. And as you can see, I am no technical analyst. I use the charts mainly to kind of confirm the trends and the thinking and the thought processes that I'm looking at. So that's one of the main reasons. If I can get this stupid thing to quit drawing here, but that's one of the main reasons that I use charts, is just kind of confirm the trends, confirm the thinking, and the stuff that I'm looking at in terms of the overall markets. And price action, price direction. But here's something that's interesting to take a look at that I haven't looked at in a while, is the logarithmic growth curves. So let's pull this up right here. And Bitcoin is well below the bottom line of the logarithmic growth curve. We haven't looked at this in a while. This is Bitcoin on the daily. And you can see back in 2009 during the pandemic, it dropped well below. And let's measure that move right there. So that was about, let's see what that is, 50% below. And right here, we got another 46% below right now. So, it's kind of borderline running with the pandemic low below the range. And that's really pretty much in the history of Bitcoin, the only time it's really dropped significantly below that lower band of the logarithmic growth curve. And what this really tracks is obviously, the history of the price action of Bitcoin through its cycle. And you can see that, generally in the history, it's always touched the top end of the range at, the market cycle peaks, and then found support at the lower end of the range. It kind of consolidated on those lower ends, for a number of months, and, a little over a year, sometimes 2 years before it went on. But this last time, Bitcoin did not quite get to the top. And obviously this was even though this was a higher high than here, it looks lower on the logarithmic growth curve, and you can see it starting to condense as Bitcoin continues to drop below. Same thing with the stock to flow model. If you look at the stock to flow model, it's well below the bottom levels of that stock to flow, which is really, measuring the amount of Bitcoin in circulation and the, supply coming online and creating, a formula to chart price action based on, supply and, in the current flow that's in the market, the supply coming to market and the current, coins in circulation, which nobody knows the exact number because some of them may be lost, things like that that may never come back into circulation. But, just kind of interesting to look at how far below that logarithmic growth curve that Bitcoin has actually dropped right now as it works into, more of a consolidation down below that range there. Let's go ahead and turn this off now. I can't, where is the, there it is right there. Okay, so we'll turn that off again. I'm no technical analyst. I just, like I said, I use these charts to kind of, just kind of look at trends, right? Because it's all about trends. It's all about ranges. So, in terms of the history of Bitcoin, you have the overall cycle of Bitcoin. It's been in a bear market cycle since existence, basically. And within that cycle, you have ranges, you have basically bear market ranges, bull market ranges, and then you have trends, right? And you have uptrends and downtrends. And obviously we've been clearly in a downtrend. So for me, I like to look at the charts just to kind of confirm thinking on the trends, draw some trend lines that kind of give you some areas to watch in terms of, what price action could potentially do and some of the levels it needs to break. And, this is kind of a new trend here, and really you have to kind of expect price, to continue downward here. And then ultimately as it journeys along, to kind of work its way, consolidate, eventually it's going to meet this trend line and then potentially break back above it and then possibly work its way up once it kind of consolidates down along the bottom, kind of like it's done, all along in the history of Bitcoin during these cycles. And, this is 2017, 2018. And if you look at from the base to obviously, I'm going to say right in this area, about 2 years that it spends, a little over, just under 2 years that it can spend in that area. This was the March pandemic here. And I think, Bitcoin was on its way to a new bull market here before that happened, obviously, like everything else. That kind of sidetracked markets. And then when the Fed came out with that liquidity, we had that huge run. The question is, how far would it have gone without the Fed jumping in? We don't know. How far will it go once we get to the other side? We don't know. We'll just have to wait and see. And how far can it go down? Well, we don't know. We just have to wait and see. So, right now we're dealing with a lot of things that were not factored into the market with the Russian invasion of Ukraine, putting pressure on food and energy prices and just, stressing the markets in general. That was one of our big initial drops. And then with the Fed having to react and respond to inflation rising as rapidly as it did, again, you had to expect that to come to a head at some point. And then, they ignored it for as long as they could. And then they finally realized, wait a minute, we got a problem. We have to act, and we have to act fast. So that's what the market's doing. So it can't really price in a recession yet, because we haven't even fully priced in what the Fed has to do yet, because the Fed hasn't really even done anything yet. They've only raised rates 75 basis points. So you're just at 100 basis points. They want to be at 350 basis points. They want inflation back to 2%. And the Fed came out and said, Powell has been testifying before Congress and the Senate here recently in committees and everything, and reinforcing their fight against inflation, their conviction on bringing inflation down, and also saying that he's still hoping for a soft landing, meaning he hasn't landed yet. So that's not priced in. You can't price in something that hasn't occurred. So again, what is the likely scenario? If we just kind of look at some of these moves here from these bases, these are 30% moves on these levels. Each time that price bases 20 to 30%, kind of drops down on these levels and just kind of bases out. So what happens if you have another 30% down from here? And these are just rough numbers. Then that puts you in that, like I said, around that $15,000 range. So if price fell down and based at, 14.5, 15,000 and just kind of ranged from there, it could look something kind of ranges here and then kind of works its way down, into that range. Obviously that's a little bit lower there. And then, just kind of ranges around in that area here until we get more of an understanding of where inflation is, if what the Fed is doing is going to work in terms of, their long-term plan and fighting inflation, whether they're going to be able to really affect things and get that inflation back down to that 2% target. So the market will just, continue to sit here and range along the way until, we get a little bit more clearance. And it could be, definitely through the end of the year that it could just kind of work its way down to this last level. If the market's happy with what the Fed has to do at that level, there's, what's the worst case scenario is that, another 30% down from there if the market kind of ranges in here a little bit. And let's say that, 15, 16,000 range is another, area that the market is happy with, then, then you're down to that 10,000 range, and then it can range down in there and see what happens. So there could be a couple more legs left to this downward move here. There's no catalyst out there right now. Until inflation is under control, the Fed can pull back and get back to business as usual, pumping the markets up and providing liquidity to the markets, because that's what this really is. Between the markets, crypto, everything, it's all about liquidity. At the end of the day, that's what this is all about, is liquidity. And again, like I always say, watch the markets into the close. We're about 15 minutes away from the market close right now. Markets picked up a little bit steam into the close, so that's a good sign. Whenever the markets are, pumping into the close, that's, good from the, standpoint of investor sentiment. Of course, it's not much. It's keeping the market kind of flat. We didn't really look at traditional markets here, but, we can go ahead and take a peek real quick on the Dow, and you can see it's just kind of continuing its journey down. NASDAQ kind of continuing the journey, definitely unwinding that, pandemic liquidity that's been pumped into the markets, kind of shedding that liquidity, working its way back to pre-pandemic highs. So I think the markets are definitely headed in that direction. We're going to test those pre-pandemic highs and then see where it goes from there. So I think in terms of all of the markets right now, Bitcoin, traditional stock market, Bitcoin, all that, I think we have to look for another 10% down in traditional markets potentially. And, like Bitcoin's next leg could be that 30, 35% down, because it's generally amplifying what happens in the markets. And, the markets are, most of them are about 10% away from pre-pandemic highs. So 7 to 10%, depending on what index you're looking at. So I think that's kind of what we're looking at. All eyes are on inflation and on the Fed, and hopefully they can, get to the point where inflation's under control. They said specifically, we want it back down to 2% before they're going to, change course or think about slowing up or do anything like that. So that's giving the market the opportunity to steadily unwind, delever, as we have seen. And again, recession's not priced in yet. It's not imminent. It's not certain. It's not guaranteed. We don't know how deep, how far, all that. There's still a lot of questions out there and still a lot of uncertainties out there. But that's the one thing the market can't price in right now, because the Fed really hasn't done anything yet. We haven't really seen the real effects of what they're doing. So we'll just keep watching. These are the things I'm looking at, and I'll see you in the next video.